I'm Dan Fitzpatrick at Stock Market Mentor, and today we're going to do things a little bit differently. A while back, I made a post in the forum, as I do from time to time, that's just kind of more on trader psychology, and I, got such a favorable response that I thought I'd prefer actually to do an audio of it because I speak faster than I type. I never misspell a verbal utterance. And frankly, it's just easier to do, and hopefully it's a little bit more helpful for you to listen to. But so I want to just kind of repeat that, and we'll do these things from time to time. I think it's important. But here's the deal: most people focus on the wrong thing in what they're working on. You want to get the best software. You want to do this. You got to get better execution. Oh, level 2 screens. I got to see that stuff. I want to know who's bidding and what size is and all that stuff. Guys, I'm just telling you, none of that stuff matters worth a squat if the mechanism is broken. And the mechanism is me. The mechanism is you. The mechanism is the decision maker. I figured that out very, very, very early in my trading career, and it was probably the biggest epiphany that I ever had. Back when I started, there were a lot of new technological advances over the internet, and I mean, when I first started, you had to call your broker to make a trade. Buy me 100 shares of IBM, and you're paying this ungodly commission rate. So I've been trading for a long time, and I've seen all the bells and whistles come and go. But the one thing that that remains constant is the trader is the most important element of the trade. Not the not the stock, not the buy price, nothing. It all just has to do with the trader. And this is why, because we all know that you should buy low, sell high. Think about it. Think about any stock. Oh, it's trending higher. It's zigzagging up and then a higher low and then a higher high and then a higher low and then a higher high. And we know that we're supposed to wait for the for the higher low before we buy. But we can't, because we see the stock and right here, right now, we're eager to make a trade. It doesn't matter. I don't need to see you a chart or show you a chart. You look at the stock and you see that it's moving without you. You see the pattern on the chart, yet you plow ahead anyway because you must own that stock. And then ultimately you lose money on it and you wind up selling to the guy who chose not to do what you did and instead was patient enough to wait for the most favorable time to buy it. And before I move on, I'll address that point very, very quickly. One of the things that I want to discuss is how you get over all of this stuff, how you figure this stuff out. And here's the thing. When you listen to me, listen strong. In fact, listen to this video many times. I'm going to save you a boatload of money through losing trades that you don't make. When you look at a stock and you just get this feeling like, well, I just got to buy this stock. I just got to buy this stock. I want you to stop for a minute before you do it and mentally change the ticker. Just look at the chart. Mentally change the ticker. You see the stock and it's Google or something like that. Instead, say, okay, well, what if this were, I don't know, Flowserve or something else, and it's in this chart right now. Would I want to buy this? The answer most likely is going to be no. And here's why. The reason you are eager to buy a stock that is absolutely screaming at you, dude, don't buy me. Everybody else is buying me. There's not too many people that are going to be behind you to push the stock higher once you've bought it. Once everybody buys, then what do we have? We got a boatload of cheerleaders, no additional buyers, but a whole bunch of potential sellers who are going to start hitting that sell button, and the stock is going to reverse. So why are you buying me again? That's what the chart is telling you. But what your mind is telling you is this. You missed the trade, sucker. You should have bought yesterday. You should have bought last week. Darn it, you missed that trade. Hey, but it's not too late. You can buy me now. You can buy this stock right now and have it in your portfolio. That is the emotion that's going on in your brain. It's no longer, I want to make money. It's no longer, oh, low risk trade, I have a defined entry. Instead, it's, I wish that you're not thinking this word for word, but in the back of your mind, deep, dark place where you don't want to go, you are thinking, I wished I'd bought this stock last week. If I buy it now, at least I own it. Totally wrong reason to buy. Totally wrong reason to buy. So the reason I'm kind of going into this is there's probably an infinite number of mistakes that people struggle with. At least, shoot, I've never found a complete list in my own trading mistakes. I seem to just keep inventing new ones. But I think there are so many common mistakes that traders make that I think it's important to see if we can't kind of get to the bottom of these and see if we can't clean the mechanism up a little bit and get to where we're able to make better trading decisions. First of all, right from the start, before we even get into this for a second, I want you to stop the video, not just yet, wait till I'm going to tell you what to do. I want you to stop the video for a second, get a blank piece of paper out, and take as long as you want. Take 5 seconds, take 5 minutes, take 5 days. I'll be here when you get back. Write down what your self-image is of you as a trader. As a trader, what is your self-image? Is it, I'll give you some, is it I'm lousy, I'm over anxious, I'm a loser, I'm a monster trader that's invincible, whatever your self-image is, I want you to write it down. Stop the video. I'll be here when you get back. Okay, I'm assuming you're back. Now, here's the deal. So you've got a self-image of yourself. And that self-image is crafted. If we're just talking about trading, we're not talking about inner demons from, childhood, time spent as an altar boy down at the Catholic Church or whatever the case may be. We're talking about your image of yourself as a trader. By the way, I was born and raised Catholic, so I can make that joke. If any Catholics took offense, deal with it. But the thing is, your self-image as a trader derives from your trading experiences. So if, for example, you have been, let's say you entered the market, you first started trading when the market became really, when the market was hard, and you really had a burning desire to succeed as a trader, you really wanted to succeed, and you waded in, you just really have been working hard, yet you can't make any money. You're losing money, you're just kind of bleeding and hemorrhaging and death by 1,000 paper cuts and all that. You got all these things that you're dealing with. And so your self-image as a trader is going to be derived from those experiences. So you may have a self-image of, I'm a loser, not as a person, but as a trader. I'm a losing trader. I can't make money. I can't get it. I don't understand. I just can't make money. On the other hand, you decide that you're going to come into the market and trade like little do you know, right when the market first starts to take off, and pretty much by buying anything, you've got a winning trade. You do that for a while, and your self-image is, wow, I can't believe people think this trading thing is tough. I'm going to retire from my job. I'm making so much money. It's just stupid. I'm a winner. I'm invincible. I'm a superstar. Well, frankly, neither one of those self-images is accurate. Rather, they're reflections of the market that you're in. Now, I've been talking just globally, like what is your self-image, your overall self-image, derived from a specific period of time, i.e., everything that's come before right here, right now, tonight. What you have to understand is that your self-image is, or at least should be, constantly evolving. Your self-image should constantly be adjusting based on the behavior that you're exhibiting and the results that you are achieving. So let's say, for example, through just like magical and divine intervention, You did absolutely nothing differently. You didn't change a thing, yet all of your trades that had typically, you had really bad trading behavior and you wind up losing a bunch of money, it seems like, on every trade. You did nothing different, and all of a sudden all your trades started to be winners. Wouldn't you, over time, get used to the fact that you're winning? You would start to kind of look at yourself as a guy who used to be a loser, but now you're winning, you're making money, you're profiting. You can do this, you can do this. You start feeling really self-confident. Now, the only thing that changed, again, was the results. Like, it's as if your broker had just gone in and, flipped things around. The point is this: you derive your self-image from your most recent results, but your most recent results derive from your most recent and relevant and pertinent actions. When you change your actions, you will change your results. And when your results change, your self-image will change. Now, why is it important to have a good self-image? And it is super important to have a good self-image. I'll tell you why. Because a trader who lacks confidence is a trader at risk. You are very vulnerable. You know how they say, if you ever come across you come upon a dog who's, mean and growling and this and that, you want to exhibit this air of confidence. You don't want that wild, mangy dog, like my Siberian Husky, who's sometimes kind of mean, to sense fear, because then they kind of pounce. You have to do the same thing as a trader, only the market's not going to pounce on you. You're going to pounce on you. If you are uncertain, if you're tentative, if you have no confidence, if you view yourself as a loser, and please listen up to me now, right now. If you view yourself as a loser, the actions that you take will absolutely generate the image that you make. Your actions will lead you to losing because that's the image that you have of yourself. So you have to change that around. And the way you change that is through behavior modification. You can't, unfortunately, your broker's not just going to go around behind your back and turn all your losses into profits and turn all your profits into bigger profits. You're going to have to figure that out on your own. But it all starts with self-image, and it's a cycle. It's a feedback loop. When you're making the right decisions and taking the right actions and avoiding taking the wrong actions, your results are going to be better and your self-image will change. Gradually, your new self-image will perpetuate better trading. Okay, it's almost like you won't have to try as hard, because with a self-image as a winner, I'm a prudent trader. I'm not a trader. I'm a risk manager. Isn't that what we talk about on Stock Market Mentor? We don't trade here. We manage risk. I'm a risk manager. I always look at risk first. I want to know what the risk is in a trade. Sure, it's great to make money. I want to make money. I expect to make money on every single trade. But I need to look at the risk, because that's what good traders do. They talk about buying risk, selling risk, increasing their risk, taking on more risk, dropping their risk off, risk on, risk off, risk, risk, risk. I am a risk manager. When you have that as your self-image, trust me on this, you are not going to chase that stock that's up 20% or 30% in 2 days. I could end the sentence right there, period. You're not going to change it, or you're not going to chase it. But instead, I'll say it this way. You are not going to chase that stock that's up 20 or 30% in 2 or 3 days without first defining your risk. And I've talked about this before. You take like one of these recent stocks like Ren, or, we do some of these every so often where we'll see one that's flying. And I've said time and time again, dude, you can buy any stock at any price, and it can still be a low-risk trade. Any stock. You can buy a stock that's gone up 500% in 10 minutes, and that is a low-risk trade as long as you define your risk. You have to see what the likelihood is of a stock reversing And that is what you use to define your risk. If you see a stock that's really, really super extended, you say, well, I got a bad case of the can't help it subliminally. I just need to have that ticker in my portfolio so I can fool myself into thinking that I actually bought the stock last week when I could have made money on it, so I want to buy that stock. Fine. Buy a share, one share, put a stop on it that's like 2% below where it is right now. Then if you're right about the stock, great. You get to make a little bit of money. You feel vindicated. If you're wrong about the stock, no harm, no foul. What you're doing is you're changing your behavior from one of a trader who just feels like he's a loser to one of a risk manager who all of a sudden is perfectly confident in his ability. You're perfectly confident in your ability to trade because you are not trading. You are managing risk. You are always looking at the downside. You are very, very confident that you will never take a big loss. Why? Is it the magic of Wall Street that all of a sudden you get imbued with some specific gift to never take a big loss? No, it's because you put yourself in a position so that the big loss is taken out of the equation. And that is either by taking a small position on a stock that really doesn't lend itself to setting stops for whatever reason, because it's like one level of support is right underneath another, which is right underneath another, which is right underneath another. I mean, you can see these things where the stock's 2% above the 50-day moving average, but the problem is the 50-day moving average is only 2% above an even number like 100. And then 100 is only like 3% above the 200-day moving average, which is only a couple percent above the last level of resistance that's since been broken through and is now support, etc., etc. So you've got all of these different levels where the stock could bounce, and you're having an issue setting a stop because you're thinking, well, for crying out loud, if I put it under this first level, then I could get stopped out. But then the stock could fall like 1% more, bounce off the next level of resistance, and then run right back up, and I didn't make any money. I got stopped out prematurely. Well, a couple things. First of all, you can always buy it back, so that doesn't solve your problem. But the other thing is you say, no, I'm a risk manager. I'm not going to mess around with stops. I'm going to take a smaller position. That's one way you can do it. Bottom line is you look at risk. You're always looking at risk. When you are doing that, the very nature of looking at risk will take the big loss out of your trading profile. It will take the big loss out of your trading. And so when you eliminate the big loss, you also eliminate the need to have to make a big trade in order to get back to where you were before. You literally are always within striking distance of your all-time high in your portfolio. Why? How can I say that? Well, because you never take a big loss. And by the way, so if you start taking a bunch of little losses, well, then withdraw. Sell everything, sit there, wait for the market to start treating you better, and it always does. And then you wind up getting back on track and you're good to go. So I got to tell you, when you've got your account, when you've got your portfolio up near an all-time high all the time, you know what? It's pretty impossible to consider yourself to be a loser. It's pretty impossible to, not completely impossible. People do some weird things with their self-image, but it's very, very difficult to adopt an image of a loser and then engage in behavior that brings that feared result about, because you've taken the big loss off the table. And when you stop taking big losses, you stop feeling like a loser. Now, you may always be looking and say, shoot, I should be longer the market. I should be in this. I should be doing that. That's fine. But you can always look at your account and say, well, I'm not making as much money as I should, as I think I should. But I definitely haven't lost as much money as I could. And guys, that makes all the difference in the world. So if you can change your self-image, your future behavior will magically start conforming to that new self-image. It has to. That's the nature of self-image. I mean, go into the self-improvement book, section of the bookstore. If there are any bookstores around anymore, I think you just got to go to Amazon. But they've got sections. They've got departments. There's probably buildings allocated for housing all the books that are out there on self-improvement. And you know what? All those books all boil down to one thing: self-image, or changing something that you're doing so that your behavior and your results will be better than you're getting right now. It's all about what do you need to do to yourself, with yourself, or sometimes in spite of yourself, to get the results that you're not getting right now. And I'm telling you, it's a cycle. It's a feedback loop. If you look at the what you just wrote down when I said write down your self-image. If you know what that is, then you have it within you to change your behavior so that you can change your self-image. So I'm going to basically end this here, but first I'm going to ask you to do this. Go ahead and stop the video again. Again, not yet. Wait till I tell you what to do. You're always jumping the gun. I want you to stop the video. Look at that piece of paper where you've got your self-image on there. Now write down underneath the self-image that you want to have, the self-image that you'd like to have, the self-image that you say you need to have. Then, underneath that, write down 3, not 2, not 4. Write down 3 items, 3 actions that you can engage in, that you can put in play immediately, that will take you and put you on the path to fulfilling that new self-image. Whatever it is, you can do it, but you got to come up with 3. 1 is not enough. 2 is not enough. 4 is too many. Give me 3. I want 3. Do it right now. Stop the video and don't start it again until you've got 3 things written down that you can do that will bring about, that will basically make the new self-image that you'd like to get, that you'd like to have, that will make that a reality. Give me 3 now. Okay, now we're back with the 3. Now I want you to do one thing. Okay, this is the easy. It's actually very easy, though I know I'm going to be hearing, yeah, but I can't. Oh, but I can't. Oh, but, oh, I can't do this. I can't do that. Stop saying can't. It's about the most useless word other than should. Okay, should is a dumb word. Can't is even worse because it's destructive. This is what I want you to do. Those 3 things that you're saying you need to do, and by the way, they need to be positive things as opposed to negative. And what I mean by that is, don't say, I can't, I shouldn't be taking any big losses, or I won't lose, or I won't do this. Instead say, I will make better entries, or I will better manage my position size, or I will buy a stock only if it's within 2% or 5% or whatever it is your number that you feel you need to change in order to have a better self-image. It has to be positive, what you will do, as opposed to what you will not do, because the mind does not recognize the negative. The mind does not, and this is not me talking, people that are a hell of a lot smarter than I am, and there's a whole bunch of them out there, have written, they've done studies and all this. The brain doesn't recognize the word no. It does not recognize the word no. When you're golfing, you're sitting there and you're saying, by golly, I don't want to hit it into that water hazard on the right. Dude, you better have goggles and fins, because you're going to be going to get that ball, because that's exactly where it's going to go. Same thing with trading. You take these 3 things that you say you're going to do. They have to be positive, affirmative things that you want to do that are going to get you where you want to go. Over the next 30 days, you read what you just wrote every single day. Every single day. You know what? Even Saturdays and Sundays. It'll only take you a second unless you're a really fast writer and a really slow reader. You read these things every single day. You put them in practice every single trade that you make. You read them before you make the trade. After you finish the trade, you read them. You execute these 3 things flawlessly for 30 days. I promise you, at the end of those 30 days, if you execute them flawlessly, I don't mean like sometimes. I'm not looking for discretion here, guys. I'm not saying, well, you know, I didn't feel like doing it then, or, oh, I was in a bad mood, or this or that, whatever. No, You execute these things flawlessly. You make that behavior that you said you need to do in order to get your self-image to where you want it to be. You do that flawlessly for 30 days. That will now be integrated into your psyche. Your self-image will be changed. Your behavior will be altered. Suddenly, you will find magically you've become a heck of a lot better trader than you were 30 days ago. And by the way, you don't have me to thank for that. Don't thank me. Thank you. All I did was give you the information, give you some suggestions as far as how to bring that about. You're the one that's doing the work as opposed to just sitting here listening to me yammer on while you're reading a book or looking at charts on your computer. Yeah, I know you're doing that. You're scrolling through charts while you're listening to me, when what you need to be doing is listening to me, writing down what I'm saying as it applies to you. Not as it applies to me, but as it applies to you. You need to be writing this stuff down and really focus on it. Because if you can change yourself, you know what? That's a heck of a lot more useful than you find in the next great trade for tomorrow. Don't think small ball. Okay? We don't do small ball here. We do big things. We do great things. And one of the biggest things, one of the greatest things that you can do for yourself is to change your self-image as it relates to trading. Because if you change your self-image as it relates to trading, your trading will improve. And when your trading improves, your results will get better. And ultimately, I'm telling you this, your life will change. Because you will see that you've got some sense of financial independence. I'll leave you with this. I met in San Diego recently a fellow who's a stock market mentor member who told me he'd been a member for the last few years. He's basically written down everything that I've said and is making great strides in his trading. He actually thinks he'll be able to retire from his job in a few years. That's what his goal is, and it's a real goal. He thinks he can get there. And even if he can't, by the way, you know, that's okay too. It's at least put it in play. And he was thanking me for all that I've done. And I suggested to him, I said, you know, I appreciate you saying that, but you're paying me a subscription fee. This is my job. You're the one that's doing the work. And so what I told him, I'll tell you, don't thank me. You thank yourself. But make sure you got something to thank yourself for. Do the work. Stop this thing. And I'm getting out of here right now. I want you to do the work, spend some time right now. Trust me, you're doing yourself a favor, and 30 days from now, you're going to look back at this and say, wow, I think I got to go do that again. And you're going to do it again and again and again. And all of a sudden, you're going to find yourself back in the forum, in the Stock Market Mentor forum, looking at traders, newer traders onto the website who are posting things and requests and questions and, lamenting about certain things. And you're going to look at it and say, wow, that used to be me. I think I can help this person. And that's what you're going to start doing. And all of a sudden, you're going to realize that you have morphed from someone who really has a difficult time trading and felt like they were a loser or they couldn't do it and this and that, to somebody who is quietly confident in their trading skills because you've done it yourself. And at the end of the day, our independence does not come from who we surround ourselves with. It doesn't come from the information or the work of others. What it comes from is the hard work and the deep thinking and the progress that we make as individuals. So I'm here to help you. That's my job. That's my passion. I love what I do. But at the end of the day, you're the one that's going to make the difference in your own trading. Do it now.